Thank you for joining us for another educational mortgage podcast, brought to you by Mortgage Mythbusters Canada. In today's episode, we will be covering 20 common Canadian residential mortgage qualification myths. Myth number 1. You need a 20% down payment to buy a home. Truth: you can buy with as little as 5% down on homes under $500,000, but mortgage default insurance is required with less than 20%. Myth number 2. Pre-qualification is the same as pre-approval. Truth: pre-qualification is an informal estimate. Pre-approval involves a full credit check and verification of documents. Myth number 3. The lowest rate is always the best mortgage. Truth: low rates can come with restrictions, for example, penalties, limited prepayment options, or portability issues. Myth number 4. You can't get a mortgage if you're self-employed. Truth: self-employed borrowers can qualify with proof of income, such as notice of assessments, T1 generals, bank statements, or using a stated income program. Myth number 5. You must have perfect credit. Truth: while a higher credit score helps, many lenders accept scores as low as 600, or even lower with alternative and private lenders. Myth number 6. Only banks offer mortgages. Truth: mortgage brokers, credit unions, and private lenders also offer competitive options. Myth number 7. You're locked in for the entire term. Truth: you can break a mortgage, though there may be prepayment penalties. Understanding these penalties is key. Myth number 8. Variable rate mortgages are too risky. Truth: they can be cheaper over time, and some come with convertibility to fixed rate with no penalty. Myth number 9. You can't buy a second property unless your first is paid off. Truth: many people buy investment properties or second homes with existing mortgages. Myth number 10. Mortgage insurance protects the borrower. Truth: mortgage default insurance protects the lender, not you, in case of default. Myth number 11. Prepayment penalties are small. Truth: for fixed-rate mortgages, penalties can be in the thousands, especially with big banks using the interest rate differential, IRD. Myth number 12. You can only get a mortgage through your current bank. Truth: you can shop around or use a mortgage broker to compare offers from dozens of lenders. Myth number 13. You must have a full-time job to qualify. Truth: contract workers, freelancers, and gig workers can qualify with consistent income history and documentation. Myth number 14. You need to be a Canadian citizen to get a mortgage. Truth: permanent residents and even non-residents can qualify, though requirements may vary. Myth number 15. You need to be debt-free to qualify. Truth: some debt is okay, but lenders look at your total debt service ratio, TDSR, and gross debt service ratio, GDSR. Myth number 16. Mortgage payments stay the same forever. Truth: payments can change at renewal, or sooner if you're on a variable rate. Myth number 17. You'll automatically get the best rate at renewal. Truth: lenders often don't offer their best rates at renewal, you must negotiate or switch lenders. Myth number 18. Pre-approval guarantees mortgage funding. Truth: pre-approval is conditional. Final approval depends on property valuation, documentation, and underwriting. Myth number 19. You can't buy a home if you've declared bankruptcy. Truth: you can qualify for a mortgage after discharge and rebuilding credit, sometimes within 2 years. Myth number 20. It's always better to pay off your mortgage early. Truth: it depends. Sometimes it's better to invest extra funds if returns exceed your mortgage interest rate. Thank you for joining us today. If you have a question, or require assistance or support, please use the email listed in the description below. To stay up to date with the latest mortgage news, financial literacy tips, and ongoing educational content, we invite you to like and subscribe to the channel. This video is intended for Canadian residents only. The information provided in this video is for general informational purposes and should not be considered or construed as financial or legal advice. Consult a qualified mortgage professional or financial advisor before making any decisions related to mortgages or home financing. Any reliance you place on the information provided is strictly at your own risk. Thank you for listening.